Hey everyone, this is Adam Sliver, and I wanted to go into some psychological notes that can help everybody build their own set of rules, and most importantly, to give you the tools in the toolbox to stick to it. Because the worst part about having some good rules is, number one, either you break them, or number two, you don't know exactly how to follow them. So I kind of wanted to give shed some light on how I think about following rules and what some of my own personal rules are so that you all might be able to take them, mold them, and make them your own. So, first off, I wanted to talk, about execution and then some psychology along the way. So, I have NVIDIA pulled up here, but I'm going to be speaking a lot before I actually start moving around stuff on the chart. So, the video is not frozen. I'm just speaking. First off, wanted to talk about position sizing. I've noticed that this is one where people, kind of can get a little bit frazzled. And personally, for me, I've struggled with this. I still struggle with this, and it's a constant battle, right? Because if you're very confident in a play, why wouldn't you take a higher position size than, say your normal medium confidence play? But I argue, why don't you just take two, three, four trades a day and consider those your high confidence plays, right? Why would you be taking something if it's not a high confidence play? Like, if you're firing away, 8 to 10 trades a day, I can guarantee you that some of those are higher confidence than others. Okay, well, the important part is that we're taking plays that we have prepared for, that we have a good sense about them, and we have high confidence, right? Why wouldn't you just tell yourself, hey, I'm going to take four trades max today? Okay, number one, that forces you to become selective. And then number two, tell yourself with these three, four plays, like I have a certain set of rules that I'm going to follow for something that constitutes a play that I would take within these three to four, right? This is all about just making sure you're staying selective and keeping yourself away from making a big mistake. So NVIDIA is an example here. So these two blue lines are my triggers from Friday. And these yellow lines are just support resistance that I added throughout the day or, whatever from trading it. So just know that these two blue lines are the important ones. So what we're seeing here is this was the open, right? It kind of went up and tested the call trigger a little bit, then came back down and then went below the put trigger, but didn't quite trigger it, which is good. We didn't get faked out here. And then you see here, it breaks down below, comes back up, does not confirm. However, we do get the confirmation down here super, super late. So since it's so far away from the trigger, I'd say, okay, I don't want to chase it, but I will wait for a retest. And if the retest happens, I'll take puts. And what we want to do here is we want to add at a place like this, right? Because if it keeps going up, goes against us, we can just simply cut it right here. I mean, very simple. Our downside is very, very limited if we're taking puts close to a level. So for me, a couple points, there's two that I want to make here. First off, I usually don't trade until after the first 5 to 10 minutes. I'm at least waiting for the first 5 minute candle to close. And why is that? Because you see this crazy volatility here. It makes it super easy for you to get faked out. And a lot of people have different rules, right? A lot of people like to play right off open. A lot of people like to wait 15 minutes. A lot of people like to wait 30 minutes or an hour. It's all about your personal preference. And for me, that usually falls in about 5 to 10 minutes. So I want the trend to be revealed to me, right? I don't want to just be playing the volatility to be playing the volatility. I want to see if there's some sort of trend that I can, play and see a good amount of follow through. So, first off, waiting and being patient, waiting for the trend to reveal itself. That's kind of my first rule when it comes to taking positions. Second would be taking something that's only right next to my level. So if I have made this level, and my past videos will show you kind of how I look at the levels and how I come about making them. I would say if I'm going through all of this hard work, I'm going to focus on my 5 plays that I did the homework for and I prepared for. I would consider them high confidence. And I believe that, if we see a big breakdown, I believe that a retest could happen because it happens more often than not. And boom, on Friday it did. And I'm telling myself I'm only going to take plays that are touching my levels, basically. And I would consider this a touch, right? Why? Why is that important? It's because I've put in the work and I know that I did the homework on these and I trust these levels. And what makes that high confidence is because um, the levels have good qualities about them to where I know that there's likely to be a big move happening from the levels. So why would I take something if it's just, kind of in a random no man's land and just be hoping, right? Why wouldn't I wait until I get what I want and I get what I put in the work for? And then if I don't get it, I just ignore it and move on, right? If you are not getting, 3 possible plays from my 5 stock watch list or your own 5 stock watch list every day, I would be extremely surprised because, I would say there's at least 3 opportunities to play something directly off of a level. You know, if something doesn't work out in the way that you would like it to, just ignore it and move on. Like, for example, I had Baba on my list a couple times last week and it just would gap up and I never ended up touching it because I never got a level retest. If Baba gaps, say Nvidia gaps all the way up here and the lowest it ever comes is right here, I'm just not going to touch it because my ideal situation would be I get a touch, right? And then I get either a tick, 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 and then bounce, and I take the calls off the trigger, or I get a 5-minute candle confirming below here, and I can take puts for the downside, right? That would be an ideal situation. If I don't get that, then it's not high confidence. So, so first off, would just be for entries, would just be entering on triggers, right? We can just get the simple breakout or breakdown. If you miss this, then wait for a retest, right? Wait for it to come back. If it's too far, don't be afraid to say, okay, I'm just going to let this go. There's so many plays happening in the stock market each and every day that if you're focused on Nvidia and it confirms way below your put trigger, you don't need to worry about it. Just if it keeps going, let it go, and you missed out, that's okay. But if it comes back and follows your plan, then boom, execute. I gave it more often than not, it will give you the opportunity. That's what I believe. And then after gap ups or gap downs, playing for the retest, right? If you see a gap up or a gap down and it never comes, you don't see me change my levels after a gap up or gap down. And why is that? It's because if it's in between these blue lines, I'm not going to touch it. However, if it goes outside of the blue lines, say it opens outside of the blue lines, I want it to come touch one of the blue lines and then I can play it either way, right? Because it's outside of the I would say it's in the volatility area outside the blue lines, and then it gives me the opportunity to play it both ways. But I want it to get near this level, right? And a good rule of thumb is when you're asking yourself, is it too far away from the level? Well, think about it. Say you added a position and then it came down and touched the level. How much would your position be down? Would you be stopping out? And if you would probably be down around 10% around that point, that's probably too far away from the trigger for you to take the position. So just wait. And if you don't get it, then move on. Look for the next play. There's always another one. So I always ask myself, is there a reason to get out? Say you took this play. Say you took Nvidia puts here on this retest. I mean, it was almost picture perfect. So I'm asking myself, do I have a reason to get out? Not necessarily. I mean, it kind of comes right down. It does bounce a little bit. Maybe you would have scaled some down here. Ideally, you would have at low of day. Probably would have been my goal to scale some at low of day. And then honestly, you could just set the break even stop because I see so many people who are not letting their winners run, but you need to make sure you're utilizing stop losses. Utilize a break even stop. The best way to let your positions run is just to put in a break even stop. You're stress free. You have nothing to lose. So, I mean, house money. You have house money to lose, but at the end of the day, if you set a break even stop and just let it run, like this position would have probably gone 200-300%, right? If it was zero DTE, maybe even more, honestly. So it was a waterfall of about $7. So you would have printed on these, right? And all you had to do was just set a break even stop at about right here, and maybe you would have gotten stopped out here. But for me, if I'm taking a position, I'm going to scale out in thirds, right? Not only are you taking, some off the table, but you are taking off possible downside risk. If you scale a third down here at low of day, which probably I would have probably scaled half or maybe even a little more than half at low of day, then you're not only putting money in the bank, but you're taking possible downside away. So then you can afford to have a break even stop, and literally your position is guaranteed to be green. And you can just walk away almost. So, but usually what I look for is I'll take off a third at about 20%, just so that I'm keeping my reward to risk ratio 2 to 1. And because if I have a hard 10% stop loss, I'm scaling at first at 20%, then I will, that's 2 to 1, right? Reward to risk. So I will scale my first third at 20% no matter what. And then the next one usually will be the next leg, and then the next third will be the next leg as well. And if you don't get it, I'll usually stop out break even or stop out at about plus 10% if it was meant to be more of a scalp type position. But what I want to emphasize is the importance of stopping out. So say you take a position here and then NVIDIA comes right up here, you just cut it. Personally, that because you can always re-add a position. I mean, I understand that that's harder for people with smaller accounts, but even if you have a smaller account, you should be able to cut a position, re-add, cut a position, re-add, like at least a couple times without going through all of your buying power. So, and if you don't have the ability to do that, then you should probably be sizing down to begin with. So, I would say always give yourself the ability to re-add, because if you tell yourself like, this is it, I'm adding, this is, I'm not giving myself another chance after this, then you're almost dead before you even started. It's like, well, this better go my way. Then you're not even prepared mentally for what could possibly happen to the downside. That's a very difficult way to start out, and that's why I always advocate for looking to possibly re-add a position and not being afraid to take the paper cuts, because of course paper cuts add up. But say you took a paper cut, say you took it here, and say you took the puts and then boom, and then it came back up and retest and you actually cut it there. I could have seen that possibly happening. You could have then said, oh, I'll wait for a low of day break and then re-add. And you were giving yourself that opportunity to possibly re-add. And if you would have re-added on the low of day break, you would have banked, right? At least to here. And then, you actually would have gotten another low of day retest 2 different times. And you could have gotten another 2 opportunities to re-add, and then, the potential to make money. So even if you did stop out break even up here, just because you have a plan, sure, this isn't touching your level, but I use new high of day, new low of day levels very regularly, because you see how well they're respected. I mean, this being a low of day, breaks down below, retest, and then boom. So you can kind of help yourself mentally by saying, okay, I'm fine re-adding. I just need to have a plan. So have a plan, right? Ask yourself, am I looking for a trade, right? Another thing that a lot of people have seen themselves do is give back gains, right? Giving back gains is, something that could happen when you don't tell yourself that you're going to be super selective. And if you find yourself, taking too many trades, or you don't even realize what's happening, but you say, man, I kept staring at the screen and I ended up losing my money that I worked really hard for in the morning. So, think the volume always dies down around lunch. If you enter a trade around lunch and you're quote unquote babysitting it, don't you always regret having that position? For me personally, yes, because the volume dries up, it just gets weak, and the market, direction just isn't as clear. From here to here, the market, I mean, it's in the same place, here to here. There was no huge volume. You can see down here, it just gets dormant, right? And then you see in the last hour, there's a little bit of movement. But usually, the first couple hours in the last hour, personally, that's where I would recommend most moves being made. That's where I see most of my high confidence setups. So knowing when to walk away, right? Think about it. When have you given your money away? Write down. What was I thinking when I gave my money away, my gains, right? Just feels like you're giving it away. Um, write down the times, like what were you feeling, what time was it, and what went into those trades that ended up giving your money away. Okay, and if you see recurring things, stop doing them. So that gets me to documenting past performance, which if if you see recurring themes that you're messing up on, or your issue is you're averaging down too much, or your sizing is not consistent, then if you're writing those down over time, you're going to see them, be like, oh my gosh, like this is the reason that I keep losing. Why, I need to correct this. And then write it down, put it on a sticky note or something, and tape it to your computer. Remind yourself of it every day before open, and then say it 1,000 times while you're trading, and just say, okay, I'm not going to do this, not going to do this. And then eventually it'll click, right? And then you'll get yourself into a better position. So I have sticky notes and post-its everywhere. I'm a huge fan of leaving yourself notes and reminding yourself of things that are important. So, and it's crucial to stay humble when you're winning. It's important. There's two sides to the coin, right? Don't get too high with the highs or too low with the lows. Stay humble when you're winning, and realize that you're just one trade away from blowing your account. If you lose your discipline for one trade, you can blow your account up. It's simple as that. And every person who's been on a green streak can tell you that there's one trade that comes in and wipes out a couple days or a week or a month worth of gains, right? That happens to everybody. It happens to me all the time. So you just have to stay disciplined. And if you focus every day on just following your discipline and sticking to your rules, then the money will follow. Don't worry about the money. Worry about taking the base hits and just compounding. And you do that over time, and you end up becoming a robot basically, and you just are a robot that's following a set of rules, and boom, the money will follow you. I promise you'll be extremely surprised if you have an effective set of rules and an effective plan. I don't see why the money wouldn't follow anybody. I mean, you don't have to be a rocket scientist to do this. So, if you've lost confidence in yourself, or you're still trying to gain it in the first place, you never had it. What I would like to do, or I would like to encourage people, okay, don't ever beat yourself up, because if you start beating yourself up, then you've lost before you even began the game. If you walk into Monday, you're trading, and you already are beating yourself up, and you say, okay, I did so bad. I lost 30% of my account last week. And you go into Monday and you say, okay, I'm going to gain it all back within a day, right? You have already lost. If you go into, a trading day saying that I need to make back what I lost, you have tunnel vision focused on yesterday, and you're not focused on what's in front of you. You're focused on your past. You're focused on things that you did, mistakes that you made, and how you're going to force today into a mold that you were unable to fill yesterday. So it's very important that today we focus on today, right? Size down if you need to build confidence. Do whatever you can do to make yourself trade like a robot. If that means you paper trade for a week, then do it. If that means you size down to where you're only taking one contract, to where you can actually build up these rules and focus on the rules, then do it. Make sure that you give yourself the ability to learn. You don't need to be playing full size every day, right? If you've lost your confidence, build it back up. Have grace with yourself. This is a marathon, not a sprint, right? If you're feeling down on yourself, it's okay. Don't beat yourself up. Focus on the very next day. Focus on what's in front of you, because if you don't, you've already lost. And evaluate yourself. Give yourself the ability to step back, zoom out, just like it's important to zoom out on a chart, right? And go to the daily chart and say, okay, well, let me see, what is Nvidia doing on, a daily, weekly time frame, zoom out. We always say that. Look left, zoom out, right? Do that on yourself. Do that on your brain and your mentality, and zoom out and say, you know, what am I doing right? What am I doing wrong? Pat yourself on the back for things that you've done right, and write down things you continue to do wrong and work to correct them. This is not, none of us are going to become millionaires overnight doing this effectively, but if you set and you follow a strong set of rules, and there will be some trial and error involved, but if you work hard on your set of rules and you follow them to the T, be proud of yourself. That's a win. Even if the P&L doesn't match that, once you start considering following your set of rules a win in your books, then that's when you start to see the consistency follow. Thank you.